All right. So are we going to kick off?
Yeah, let's kick off.
Okay. Hi, guys.
Busy but good.
Busy but good. I feel like we need to stop using the term busy.
We do. Yeah, you and I talked about this, didn't we?
What would you like to replace it with?
Well,
I think Aaron had decided to say full instead.
life is full, but even that feels like a bit of a cop-out. It's like when I say to my kids, how was your day? And they say, good. And I say, no, they have at least 3 words. So they say, it was good. And then we go in this cycle and never get anywhere.
Okay, then I'm functionally engaged to the maximum. How's that?
That sounds like a medical condition, actually.
It does.
Yeah, it sounds like you might need to go see a doctor.
Another medical condition.
For those who are watching and are used to watching, you can tell I'm in a different environment. So I'm in the Qantas lounge, actually, at the moment, which is ironic because we're about to talk about Qantas again. It feels a little bit traitorish to do that.
Yeah, don't speak too loudly.
You walk into someone else's home and start talking shit about them.
Does feel a little bit like that. But anyway, that's where I am. But what about you guys? Aaron, what's been keeping you busy? Bit of mission or offsite action, I think?
Offsite work, definitely busy organising that and doing some calls and reach out and wrapping up the London mission, having a few conversations already about the next couple of missions for next year, which is exciting.
Do you want to talk a little bit about the offsite, just for those who may be the one that's coming up?
Yeah, absolutely. So 10 to 12 of November, offsite right on the border of Queensland, New South Wales, and we're disappearing away with 20 B2B founders to talk all things growth and scaling. So we'll be covering scaling your organization and teams, and particularly with a focus on entering the UK and US markets. So we'll deep dive through frameworks and tools, mindset, organizational structures, articulating your messaging, like how do you actually pitch your value prop and what you do clearly, and do's and don'ts of UK US expansion. So it's one of those things I love doing it. We've run a number of these. I love the group that comes together and that space for really honest and transparent conversations. And there's so much content on this stuff, but it's actually applying it specifically to your organization, your startup. So for founders who are interested, we do have some places still available. All the details are up on the site. I'm sure Don will add them to the show notes as well. But if you're a B2B tech founder, we'd love to see you there.
Will you, Don? Will you add it?
I will. It's only a suggestion, but don't forget who's made it. I'm looking forward to it. I was finalizing the edits on the podcast we're about to release with one of our portfolio Apply ID. We had Claudia and Russell, and a lot of that podcast is about market entry into UK, expanding, and a lot of the lessons learned. And why I enjoy these offsites is it's really getting to the heart of some of the challenges so we can proactively learn about them and not make those similar mistakes. Although, as Russell rightly points out, it's important to have a process where you're able to make mistakes and move quickly. And I guess these offsites are about how do you provide some of that information proactively.
I think it's just a good way for a whole bunch of people who are grappling with the same things to get together and have a bit of time where they can bounce or kick around the problems that they're having or challenges that they're having with other people who are going through it too. Like that sort of cohort or tribe aspect is really important. I think learning from your peers, not just us.
Yeah, it's a great way to expand those networks, but people are a product of their environment and ideas come out in certain environments, and the location that we choose is a magnificent location that has some really great aspects about it, and being able to switch off a bit, come together, really think deeply for a couple of days about the business. You just don't get that in your day-to-day operations.
No, absolutely. And often we know what it's like as founders. You tell yourself this narrative of, I can't afford this time away from the business right now, or I can't afford this investment. But the value you get in terms of refocusing on the right things, coming away from the offsite and not making those mistakes, and the savings that you make by learning those lessons in advance. But to your point, Lainey, I think that the cohort value is just phenomenal. And that's really the legacy after the offsites and missions that we run, is that bonded group of other founders that you continue that journey with for those shared learnings.
And a group chat that just has
Yeah, I was thinking that.
True.
some
the last one we ran
wonderfully
was in.
insightful stuff, but also some very funny, degenerate stuff. And I love that balance.
Keeps you sane.
The one we ran in February has still got everyone engaged on the chat,
Yeah.
even now. So I think that cohort part is really critical.
Yeah,
Awesome.
absolutely.
And Jack, what's been keeping you busy?
Just finalising the recent memo that we're hopefully going live with the syndicate this afternoon.
That's right. Doing all the work.
Yeah, we
Yeah.
swan around.
Jack makes me look good.
Not true.
Awesome. Okay. Shall we get into some news?
Yeah, let's do it.
Let's do it.
Okay. We're catching up on a couple of weeks because last week we really only focused on one news item, which was Qantas. So we've got a couple of weeks of news to focus on. For those who are listening, you may think some of the stuff we're talking about was a week ago. Surely we've moved on now. You might have, we haven't. So we might cover it anyway. But I guess there was a bit of a theme over the last couple of weeks around the fact that we're coming out of a VC winter into kind of a VC or a startup spring, I think was the way that Paul Smith characterized it in the AFR.
Yeah, and we're starting to see it already in terms of deal flow picking up, quality of deal flow picking up. Also, Don, you picked up on the valuations that we're starting to see lift a little bit as well in deals coming through. It's definitely noticeable. We're shifting back up gears.
Yeah, there's a lot of positive momentum, and people that are professionals in this space, I think, are still looking for good value and they're looking for the best businesses. But now there's some competition coming in for those. And so we're seeing those vals respond and the confidence from the entrepreneurs to probably raise a bit more than they were considering last year.
I think a lot of this we've covered before in the podcast, but there was a couple of interesting quotes in that article that Paul Smith wrote. And it was really about how business was still, and I think this is potentially noteworthy for our audience, which tend to be focused on B2B, but that business, despite needing to engage with software solutions, are still really struggling to make the investment needed for things that will make their business more efficient because they just don't have the budget for it at the moment. I think there was a quote, something like, if I just read it now, there are just budget constraints. So even if you can identify something that's going to save money over a 3 to 4 year period, they're not prepared to invest in that today. And that's a really challenging environment for a vendor. And I thought that was a really salient quote. And that we're coming out of a winter, sure, but business, who are the customer, are still really struggling.
And it's not just the software itself. The larger the organization, the bigger cost of their internal change management processes. So even if there isn't additional, say, consulting resources required, you still got to train people. You still have to have that period of time of inefficiency. And that's why it's always really hard where founders build products that are more efficient and get a lot of improvement for the customer. But because of the friction to implement the system internally, the features and the pricing have to be a quantum leap. And I've seen some really great products and some really great services not get traction because at the end of the day, it was just too hard for the people internally and it wasn't a big enough problem to warrant the pain.
Yeah, the true cost of implementation is often not understood with selling into a large organization. The other thing I'm curious, we didn't have a chance to chat about this, but how different is it from B2B to B2C at the moment? Household discretionary spend has been under pressure for a while. Is this a unique time in market for B2B as distinct from B2C, or are they both under the same pressures at the moment?
My guess is they're both under pressure. My mortgage has gone up substantially over the last little while. It means my discretionary spend has gone to almost zero. And I'm probably not the benchmark, but if I'm struggling, I'm sure everyone else is as well. And so that's going to impact B2C businesses as well.
What's B2C? I'm joking. I'm just so focused on the B2B, Aaron.
I didn't know how to take it.
I really wasn't sure if he was joking.
Yeah,
Oh
I'm
my
like,
goodness.
we want to explain this to listeners. Was that your point?
So I look after some family office assets across a range of different sectors, and we are absolutely seeing the B2C sector tighten up. And again, it's not too dissimilar to some of those B2B problems. And like all of these more difficult times, the entrepreneurs that are the most resilient, that are able to be the most flexible, that are able to change, are the ones that float to the top.
There was another comment, if I'm remembering it correctly, in that article around how companies are expressing their growth relative to the market as well. So they're saying, yeah, okay, we didn't grow 100% like we did the year before, but relative to everyone else, we're outperforming. And I thought that was an interesting way to position it, because everyone's struggling with this, but still, as a startup, if you're trying to raise money, framing yourself against in relative terms is a smart way to go about it.
Yeah. And what we're seeing is, I think at the tail end of certain transitions, you still end up with certain narratives hanging around. So we're still seeing some of that boring. Okay, sorry, it's not boring to those that are affected by it, but it's this constant thing around laying off and staff redundancies and those things. That's a normal part of the cycle, but we're really seeing at the front end, it's actually the opposite. The really successful businesses that have found product market fit, that have good scale metrics, that have got that marketing machine working, they're really pushing forward in expansion mode now.
Yeah, there was another little small thing in that same article. They referenced Services Australia and a startup that had done I think it was a pilot program from memory, a proof of concept, and had really great results from the proof of concept. But the feedback from Services Australia was, no, we can't implement this now. And it resonated for me because I actually did some work with Services Australia about 3 years ago, and there was a really poor culture. There was this, one of the things we identified was that management had default no. So any new idea was default no. There was a culture of cynicism and low trust. Staff actually stated themselves that it's okay if I don't do it because someone else will. So this shirking of responsibility, and incredibly dissatisfied workforce. And it's an interesting lesson for founders who are selling into government or B2B, is that yes, you can do a proof of concept. Yes, your product can have amazing outcomes and efficiency gains and tick all these boxes, but still you can hit these roadblocks that are difficult to know or measure externally, just around culture.
So while we're on the topic of funding, in Capital Brief this week, John McDooling wrote about how it's not just that you can raise venture capital, it's who you raise it from as well, which obviously we biased know to be true, but it's worth pointing out that this is an important point. So he was referencing the fact that Dovetail had mentioned that in their most recent funding round, they had been offered funding by Andreessen Horowitz or A16Z, and they didn't take it. And there was no, certainly not in what I read in any of those articles, was there any commentary from them as to any judgment around Andreessen Horowitz. But that's a big name venture capital firm, and so it was newsworthy that they elected not to take capital from them. But obviously what John was trying to make a point about is that some other investors, not Andreessen Horowitz, have in recent years, with the tech bubble and challenging valuations and having to reset, have had some not so great behavior. And so who you take your money from is actually super interesting.
And it reminded me of the Luke Anea episode that we did, where he spoke about being offered $500 million in fresh capital at a $5 billion valuation at the peak height. But they had the sense to understand what the consequences of taking that would be, and they decided not to. And Luke was one of the few that's been able to raise capital at a higher valuation more recently. And that who you take it from, what are their ultimate motives, what are their structures, if they get into trouble, what's the pressure that's going to be on you. I think it's really important that entrepreneurs look at that. We often talk about it's not just capital, it's what assistance are they going to provide, and a lot of firms will provide that assistance. But what pressure are you going to come under if something changes on their end, it's really important to analyze that.
Yeah, we've spoken in a previous podcast, I think, about when corporates invest and come onto the cap table, and there can be misalignment of intent. You need to understand why is that corporate investing in your company, and also the things that they promise, and all of that might change when a key person leaves that corporate. But also on the angel side, this isn't distinct to VC or corporate investors. We often talk a lot about being careful what angels you bring into your round. And I think there was a company we took to the UK who I won't name, but when they came back home, they were close to completing a round from some local angel investors. And as they shared their new vision for UK expansion, it was really clear that the angel investor didn't see that vision, and there was conflict there. And so they were able to actually not proceed with the deal and save themselves that future heartache. So for founders, it's a difficult thing to manage to know. How do you determine that fit, I guess, is the question.
I think my commentary is always that founders should be due diligencing their investors in the same way as their investors due diligence them. And it's actually not difficult to do because it's such a small industry that it's really not hard, I think, to ask around and talk to a few people who've worked with an investor. You know, in my previous fund, if we were looking at an investment, I would give them the names of every company we'd invested in. So not select ones, because that's like when you apply for a job and you give 3 referees. Of course, they're going to say the nice things about you, but I would give them every one of our companies and the CEO or the founder's contact details and say, go chat to them. And actually, I spoke to a founder last week who had been offered a term sheet from an investor in Australia and due diligence that investor with not only the people that investor suggested they speak to, but also all the other companies in their portfolio, and spoke to other investors as well who had co-invested with them. And on the back of due diligence, they decided not to take their investment. And so I don't actually think it's difficult, but it can seem a bit, I think it's a difficult conversation. How do you have these conversations with other co-investors and other founders? But you must, I think.
Yeah, I think it's the perception of it being difficult.
Yeah.
The practical steps are actually pretty straightforward.
I got some good advice early on with my first PE investors back in the day. And the advice I was given is ask them for some references, but of the worst performing businesses in their portfolio. And so I got that, and I spoke to a guy in New Zealand, and these investors had put money into this business and then had taken it to the New Zealand exchange, and they listed it $1. And at the time that I spoke to the founder, I think it was at 4 cents. So fairly significant challenges. But he said, look, we've had challenges. There's been a whole lot of issues, but these guys have been tough but fair, had always been in my corner. I'd absolutely recommend them. And we did. And interestingly, I haven't thought about it until this exact second. Similar pattern played out. They invested. We went public. The founder they had backed, a la me, got himself into a few founders' traps. But they were fair. They were reasonable. And I look back on that journey with both emotions of pain around what happened to the business, but fondness of having some really great investors and people that stood beside me through all that.
Yeah, and you make a good point, which is as part of that DD, you should be asking what happens in the tough times, because it's easy to speak very fondly and positively about an investor group when everything's going really well. But actually where I think the rubber hits the road is when things are not going well. I've had companies
Lainey,
that
you've
have
had some experiences in this. What have you found?
We've had companies that have had to go under or into administration, and it's amazing how very big name investors will scatter when that happens and have absolutely nothing to do with the cleanup or the wind down or how to manage.
A bit of new phone, who this?
Exactly. Yeah. And I'm talking big name investors, and some may say they're so busy, they don't have time to help the zeros in their portfolio. But you can't be an investor who says that you're there to help founders and add value, and then only do that when things are going well. You must also be the ones who help them navigate these really challenging times as well, is my approach. Investors who have just done the most appalling things from a funding perspective to the company, to other investors, like putting term sheets down to lead around where they get very special terms compared to everyone else who is thinking that they're going to invest on the same terms. That sort of behavior. So I think it's important to diligence not only what happens in the bad times, but I think you should also diligence not just other founders, but other investors, because there'll be a whole lot of shenanigans that go on in the background with investors that certain founders may not even be aware of. And so I think the co-investment DD and reference process is also really critical.
Yeah, I think it's such an important thing for founders to do. I remember receiving some really good advice once, which was try to interact socially with your potential investors ahead of taking investments. So get to know them socially. And the one time I was offered investment in our software company, I remember this moment. It was a $1 million check, which at the time was very significant for us. And this investor I didn't know particularly well, but just started having coffees and then beers. And through that process, it came out that, and I can't say much to identify this person, but they were part of an action against the government, disputing currency as a legitimate thing, and therefore he shouldn't have to pay his mortgage. And just the more he spoke, I just realized, okay, this probably isn't.
Sounds genius.
I'll introduce you. There were other things that I won't air, but it was a really interesting lesson in really getting to know someone before they come into the cap table.
And we've spoken about it before, but if we think of this idea of there's only 24 hours in the day, and where your energy goes always goes first to having to solve problems and challenges and conflicts, and only what's left over can you use inside the business to achieve greatness with customers. And so the problem is if you get the wrong investors, wrong partners, wrong anything, your energy gets sucked into that, and then very little energy gets left elsewhere. And it's just so important to understand that you could take a very small amount from someone who gives you 99% of your brain space and your energy and your inspiration. You can go out and achieve greatness. Or you can take a massive check from people that suck all that energy and leave you 5% to go out. And it's actually the smaller check that would make you win.
And I see why it's attractive, but I think from a founder's perspective, it must be very hard to turn down money from brand name investors if you make a decision that they're just not the right fit for you for whatever reason, because it's a credibility anchor, it's a validation, all of those things. And, I don't know why Dovetail didn't take money from Andreessen Horowitz, but it just might not have been a fit. But God, that's a courageous decision to say, we're going to set aside this brand name, which I suspect would get them a lot of traction to pick the right investor. But
I'm reminded of the Silicon Valley episode, the Silicon Valley series on HBO, where the two founders are at the bar and his startup had just crashed and he'd taken $100 million investment from a particular investor. And the other founder said, you do realize you could have said no. And his mind was, what? I could have said no to the investor? Why didn't you tell me that? But yeah, being very aware that saying no is very powerful.
Yeah. I remember that episode, actually. God, I miss that series.
Oh, I really do. The documentary of startups. It wasn't a comedy. It was a...
But the precursor to being able to say no is confidence. And so it's making sure you get yourself into a position where you have the ability to say no. And sometimes founders have made some decisions that don't leave them that wriggle room. Yeah.
And Don, just on that, who are the best people to take money from? I know you touch on this, Don.
Yeah, who's the best people to take money from? I've always said there are 3 buckets of money. There's people that intimately understand the problem that you're solving. Like they either from the industry, they've been in the industry, they just know it. That's the best bucket because they are going to be able to see through a lot of the challenges and see to the other end. The next bucket are those that absolutely love you, just believe in you, and just say, here's a check. The problem is that those people are generally few and far between. They're not easy to find. And then there's the third bucket of, I don't really know you, I don't know the industry, but growth rates, your performance, everything else tells me that you're going in the right direction. And the problem with that bucket, it's the largest. It's, I don't know, 99% of money. But then you end up in this chicken and the egg conversation of just give me the money and I'll show you all that growth. And then we're like, yeah, a little risky. Show me all the growth and then we'll give you the money. And entrepreneurs end up spinning their wheels and spending a lot of time in conversations that aren't going to go anywhere. So I always try and understand, has the entrepreneur first mind all of the people out there, all of the firms, all of the investors, and sometimes customers who might be willing to invest or prepay for contracts? Have they mined all of those first before going to the bucket that needs to see full validation in order to hand over money?
I think that's really good advice, John. While we're just still on the topic of funding, Wallamai Capital, so the family office of Robin Denholm, who, for those who don't know, was chair of Tesla, Australian female investor now, who was using her family office to do a whole bunch of investments, but one of note was the fact that she would like to back more female-led ventures. Great to see, and wonderful that she's using not just her wealth but her influence to help rebalance some of the funding inequity that we see. But one thing that kind of caught my interest in that article was the discussion about how the funding of female-led ventures has actually gone backwards over the last 12 to 18 months, and no doubt post-COVID. Any comments or thoughts on that?
Yeah, so I went back to the cut-through ventures data on the Australian landscape for last quarter, so the most recent data I could find. And it also showed the same things. Funding for female-founded ventures was down last quarter compared to previous quarter. Their 2023 data, so I've just got it here, was 22% of funding to startups that had at least one female founder, but only 3% for all female-founded teams. And if you compare that back to previous years, it's actually been a downward trend since 2020.
And do you think, does COVID have anything to do with that? Like, or do you think this, and or do you think cost of living pressures has made it more difficult for women to make that decision, perhaps to run with their startup? And we talked about this when we talked about Bright and Catherine's kind of decision to start her company and all the various factors that came into or weighed in on that decision? Or do you think it's something else?
Yeah, I don't know. I'd love to see the data on the unfunded. So I'd love to see the deal flow data coming through and then do a comparative. I think it's probably a lot of factors. I definitely think I do, and maybe this is a projection, totally unvalidated, but I do feel like the household pressure on income and household dynamics would absolutely be a factor.
Makes it hard to take risks if you're not sure how to pay your rent or your mortgage, right?
Exactly. Like we know the life of a founder, particularly in a family dynamic. Often one parent is taking that, I want to say leave pass, but obviously it's not a leave pass, but that stepping out of financial security. And if the other parent or household manager doesn't have that financial security anymore, or there's uncertainty in the economy, that's introducing a lot of extra risk. And so that will factor into decision making for an early stage founder.
Yeah, we've discussed before the view that structure achieves strategy. And structure isn't just an org chart. It's like, how are you structured in terms of your life and your ability to do certain things? And one of my issues sometimes with entrepreneurs standing up and saying, my success was hard work and vision and product market fit and strategy. But actually the talk should have probably started with, I had no overheads, no one to care for. I was able to couch surf. I didn't have to go and do X, Y, and Z. And because of that structural flexibility, I was able to go and do X. Meanwhile, the people in the audience are feeling a little bit down because why am I not smart enough to go and do that? And actually there was a structural thing that allowed those people to go and achieve that.
Spot on, Don. That you could call it privilege, you could call it structural advantage. Yeah. Those things are almost never acknowledged as.
And Aaron and I got the privilege of presenting, and in my case, putting to sleep some students at a college yesterday.
I feel like you need to expand on that.
Yeah,
putting to
No,
sleep.
I don't want
Yeah.
to.
They didn't fall asleep because of your talk. It was you led them through a meditative.
I did one of the things for kids at school is that sometimes they feel that they have to be incredibly intelligent or smart or get major grades to be successful in business, but it's mindset, it's behaviors, it's networks, it's those kinds of things. And with mindset, being able to know thyself, understand when you're not operating in peak, and being able to connect with yourself to let the feelings go. So I thought I'd experiment as a demigod yogi or something and just show them what I meant by keep calm and observe yourself. So I did a little mindfulness thing. I've got them to close their eyes and what's this feeling? And a couple of them just never came back. They never.
Now this is 14-year-olds, right?
Yeah, they never reawoke. And it's funny the judgment that you can feel from. I've spent a lot of time in some of the biggest boardrooms in Australia, and I feel absolutely confident. You put me in front of a group of 14-year-olds, and it's time to call the therapist. But anyway, I have no idea where this diatribe had me going. Can someone remind me?
I think we were talking about how these structural advantages and these privileges grease the wheels and make it possible for certain people to achieve certain things. And I think you were going probably to draw in some of these bits of advice that you were giving the school yesterday as the things that actually do contribute to success, not the things that you think they are.
Yeah.
Like
and
being the smartest person in the room, for example.
Yeah, absolutely. It's those other elements that actually come into it. But often entrepreneurs that have achieved a lot of success find it hard to self-diagnose those items. And
which is why I think it's really tricky to look at other people's paths and say, God, they did it. I should be able to, because hindsight, people never really count the things that actually matter in their kind of retrospective storytelling.
And we don't often realize that scaffolding that we have because it's there for us.
That's right. They're not being disingenuous. They just.
No, exactly.
Success leaves clues, but it's not a perfect roadmap. There's people that are incredibly good at sales often rise to the top. But what's a precursor to being incredibly good at sales is actually being incredibly good at not feeling judgment, not being able to not care what other people think.
Like cope with rejection.
Cope with rejection. It's actually a psychological thing first that some people are just absolutely born with, but some people are not. I look at my 2-year-old son, and just the slightest thing when he gets into trouble is he's a bit like his father. Chemicals get released that he has no control over, and he just loses it because he's in trouble. That is a genetic, biological thing that's happening to him that in time, if you become aware of it, you can start to unpack it a little bit. But then there are some people like my daughter, she's just total opposite. I don't give a shit who you are. I'm going to keep doing what I'm doing. It's understanding those little things. If you can understand yourself, you can then better get yourself into a position.
Yeah, and look, listeners, please don't take any of these comments as the reason why we think female-led startups or women-led startups are not getting funding.
No.
But I think the risk element and the cost of living challenges has probably made a huge dent on people's risk appetites over the last few years. And I think that is especially salient for women entrepreneurs.
Yeah, I just want to remind people, if I'm just bringing it, for those listening at home, this is the chart that came out from OpenView Advisors that just talked about the percentage of companies that had at least 1/3 of women on the leadership team, and then the performance of their median growth rate. Where women are represented in this manner in those teams across a whole range of different revenue bands, the performance is much greater.
Absolutely. As painful as it is to see this data, particularly as a female entrepreneur, it's still possible to get to over-index in women-led ventures because of stuff like that data that you just showed, Don. Like, that's powerful data, and it's data that we believe as a investment group here. And it's the reason why 30% of our investments are in companies that have a female entrepreneur in the co-founding team or the leadership team.
And it's one of the criteria, but we're certainly trying to lead where possible. And we had something that came to us a little while ago, and there was no women represented anywhere. Now, the deal had a whole range of other issues, but it's one of the things we looked at and said, there's no diversity in here whatsoever, and that does not, in our opinion, lead to the best outcomes. It's just one of the things that I think is going to become more prevalent.
Yeah, absolutely. Absolutely.
Yeah, it becomes a negative lens that we apply, right?
Yep.
Yeah.
Yep.
Okay. Maybe just to change tack a little bit, speaking of women in management teams, just not to labour the point, but there has been also some news on the Qantas front. Maybe it's worth having a chat about that, particularly as a follow-on from our podcast last week. Don, do you want to lead off?
This is where we unleash Don.
We always talk about patterns, and it's just one of the most predictable patterns of aging corporates is to call in the big consulting firm, in this case, BCG. And my previous life was that of a consultant. Consulting is really important when you are missing domain expertise, when you are missing knowledge. Inevitably, either is useless because they write a report and it sits on the shelf, or actually it causes more challenges. People inside these organizations know what their problems are. They're not stupid. What they often lack is the rails to run on how do we all get aligned around these problems, and how do we go about solving them, in what priority, what resources. And underlying all of that is conflict. If everybody was on the same page and aligned on what the sequence is of the things we need to solve, they could just get on and do it. But especially at this life cycle location, what starts to happen is that there's a lot of destructive conflict around what is actually the problem. People can see the problems, but they have different perspectives. Is this a priority? How do we actually solve it? And what we find in organizations that they're trying to bring the consultants, when an issue lives in the realm of either an individual or a team for them to go and solve themselves, they solve it. Like they just go and do it. People are not lazy at any phase of the life cycle. The issues that hold organizations back year after year are the issues where you need multiple divisions, multiple team members, multiple levels of the organization to work together to solve them. And the problem is, as organizations, and we've got a company pitching to us at the moment that delivers some technology to companies like Qantas. And the problem is they're so siloed and the decision making is so dispersed that trying to bring multiple teams together to solve it is next to impossible. And so what we end up finding is the consultant comes in, they write a report on what the problems are. They then say, this is what you need to do. But actually there's a core issue where they're having a problem solving their problems proactively as a team in the face of day-to-day demands. That's always the problem for most organizations at this phase. Yes, there are individual problems, but the biggest problem is as a team, we just seem to not be able to solve our problems in the face of day-to-day demands. And you find me a high-performing culture and a company that leapfrogs everyone else. Their core culture, their core competency, their biggest asset as a business is we are really good across this company of identifying and solving problems in the face of day-to-day demands. That's where they need to get to. But they appoint a consultant to say, here's your problem. And the bloody merry-go-round goes around. And that'll be I reckon that's what, a $10 million project.
Look, I think often, particularly big companies, governments and the like, will appoint a consultant mostly because they're trying to outsource the responsibility to fix it. So
It wasn't me. BCG told us to do it that way.
Yeah.
that's it.
Yeah.
It's more about distancing themselves from the recommendations so that if when they execute them, they don't work, they can say, well, it wasn't my solution. It was the one that BCG gave me. And I find that whole is the sort of antithesis of what you should be doing as the leadership in a business. You shouldn't be outsourcing accountability to someone else. That's the bit I struggle with.
Yeah, absolutely. And I think the other pattern recognition we saw this week in news was the CIO exiting. And we did talk about this last time, the expected leadership changes and key executives walking out the door. I don't think we have insight onto why the CIO left, if it was by choice or by request. But I expect we're going to see more leadership changes, right? Like we're going to see more of the senior teams leaving.
It's interesting, isn't it, that the CIO leaves at the same time as BCG are appointed to solve this customer-facing issue. One of the comments I think both Don and Aaron made in our previous podcast on Qantas was that there was probably lack of communication between different elements of the business, which led to things like flights being cancelled but tickets still being sold for them, which is an information and a systems problem, possibly. Assuming the best, it's a systems problem. And fellow leaving, it may be reflective of the fact that they've identified that their systems are not up to scratch and are not actually able to service their customers in the way that they want them to.
Yeah.
Which, on a background of this phase, as we discussed last time, is a phase of financial engineering, and you start prioritizing cash flow and profits over the effectiveness of the business. At some point, the chickens come home to roost. And once they've entered this phase, what we start to find is what the problem isn't the main focus, it's who to blame. Because if we can focus on who to blame, that's a little easier. Then we bring in a new person. It's a bit like saying, I want to bake a great cake, and you've got all the recipe and you've got all the good apples, the people, but if your oven and your structure and all that stuff is broken, what is the outcome? You've actually got to go and fix all of those things in sequence and not just blame people.
Yeah.
Agreed. So I guess based on our previous experience, we're probably likely to see a lot more people cycle out in the next little while.
Absolutely.
Yeah. I think a nice little segue from Qantas and planes to landing pads. So last week or 2 weeks ago, we saw an announcement that there are 2 new landing pads for Australia being introduced, one in Indonesia and one in Vietnam. And for founders who aren't aware, trade, so the Australian government has these startup landing pads in US, UK, Israel, Singapore, China, India, and they're designed to be and make it easier to enter these markets for early stage companies. I've been quite involved with the landing pads since their inception, so even from their design, and it's been interesting how the program has changed. So originally it was structured as a program and there were landing pad managers appointed, and some of those landing pad managers were phenomenal. Shout out to Omri in Israel, just a phenomenal connector and human. But others were a bit lackluster. And so they redesigned the landing pad model probably about, I think it was about 2 years ago, maybe 3. And now they've actually outsourced it. In Israel, it's a partnership with SOSA, which is the River City Labs, all the fish burners of Israel, but with a really strong corporate focus. And then in the UK, they focus more on a marketing agency partnership. But I think for founders who are listening, if you haven't looked at the landing pads, you definitely check them out. I do rate this partnership model approach that they're using now. You do need to be post-revenue and actually have some sort of receive some sort of investment to be eligible, because they're looking for companies who can actually, they're at a point where they can enter market. But check it out. I do think we've lost, though, the non-programmatic support. So under the old model, and I think Laney went to Israel and met Omri, and some of those landing pad managers were just phenomenal connectors that you could call upon at any time. Whereas now the support is really only available to companies who are actually in the landing pad program. So we have lost, I think, that extra dimension of support, but still a great program and great initiative.
Yeah, I think the space is great to have a physical space that people can land on, but it's the trade support that really is what moves the dial for companies, I think, who are trying to expand into these new territories. And so without that, it becomes a little bit.
Yeah, and it is one thing, in the new model, they've made it less about the space, which is good. And they have actually tailored with a partner in each market with some, it's quite strategic. So UK, there's that focus on marketing, brand positioning, which is great. Israel is much more about connecting the founders with the multinationals there. And for founders who may not be aware, one of the reasons Aussie companies look at Israel isn't as a market. I mean, it's 8 million people, mostly agricultural-based population. it's actually to access the 350 multinationals that have R&D teams there. And it's actually often faster to get a multinational contract by going to Israel and landing in Tel Aviv than it is to try and achieve that from Australia, just because the staff there are used to dealing with startups every single day. So I do like how they've made it a bit more bespoke to each market. It makes sense.
I think the Southeast Asian market is incredibly important to Australia, should be incredibly important to Australian companies. It's enormous. It's very easy to focus on the kind of two English-speaking markets that we talk about a lot, UK and US, which is obviously an investment focus for Tribe. But in my previous fund, Ben Dunphy was very focused on that Southeast Asian market and understanding that was a natural expansion strategy or market for a lot of Australian companies, but it's also just enormous. It's just very fragmented, and that makes it difficult for a lot of companies to think about how to navigate it. So I feel like these landing pads have extra importance or significance for Australian companies in this market, because having them in Vietnam and Indonesia will help these companies navigate what is a large but fragmented market.
Yeah, I completely agree. I think it's fantastic to see those two new landing pads announced. And yeah, we're very much focused on UK, US because that's what we know, and that's where our networks are strongest. But I think that Southeast Asian market is and it's the other thing for me, it's really interesting when we go overseas, how Australia gets pitched to other countries. And often at events in the UK, for example, the pitch that is given of why UK companies should look at Australia is for market entry into Southeast Asia. And the commonality of our common law and language and culture as a great place for a UK company to come and set up, but then to access Asia. And so I think it's one thing that has probably been under-supported historically in Australia. And so it's good to see this shift now where we're actually setting up some infrastructure and support like this into the market.
Awesome. Okay. We'll put the details of it also in the show notes about these landing pads, because I think that is extremely important and interesting for Australian founders to investigate. Look, it wouldn't be a Tribe weekly news wrap-up podcast if we didn't talk about Elon.
If we didn't try and frustrate Don.
Send Don's blood pressure sky high. So, look, there's been so many potential things to talk about with Elon, but the one that sort of list two, one, the Walter Isaacson biography is out, I think, today. So I will have pre-bought it. So I will be looking forward to reading that. But he's been dropping little crumbs about the biography over the last couple of weeks to get people interested. And one of the things that dropped a couple of weeks ago was his revelation that the reason Elon bought Twitter was to prevent the woke mind virus. And there was some discussion about how one of Elon's kids identifying as trans was a real catalyst for his kind of flip to this more right-wing political persuasion, and that his daughter is influenced by the woke mind virus and felt that Twitter was very central to the spread of this woke mind virus, and so wanted to buy it to rectify that. There was a lot in that sentence.
It is
amazing
what entrepreneurs will do to give some clever reasoning for some fucking dumb decision. That's all I can say on that. I did it to protect the world.
I just feel for his daughter. Like, how does his daughter reconcile his dad's reaction to look what the world has done to my...
Look, I joke around a little bit, and he's done some things. If I come back to what I was trying to say earlier on, mindset, behaviors, networks, like here's someone who absolutely manifests whatever they want, and there's a lot that we can learn from that. But in terms of what's happened to Twitter, just as someone that engages with it, even from trying to get some of our content out there, it's a bit of a wasteland of engagement for, I think, general things. I still will from time to time go back there if there's like a specific thing I'm trying to find from an author that I know is really good, especially around charts. And if they're still there, that is helpful. But it again is interesting to see how it's all descended because of some personal biases. That's all.
Yeah, look, there's so much in this article. For example, his view that woke was anti-merit, hang on, let me get this right. Anti-merit, anti-science, anti-human. I could riff for an hour on this concept of merit, but so just in case for listeners, if you're still wondering what woke actually is, that's Elon's definition. And I think it's probably fair to say that Twitter is all of those things actually right now, more so than it ever was. Anti-science, anti-merit, probably anti-human. But I think some of the other interesting things that was in that article, which I'm looking forward to reading the biographies, just some of the machinations that were happening behind the scenes when he took over. And I think this will go to some of the stuff you talk about, Don, about patterns. When he bought it, his statement was that the Twitter CEO was a nice guy, but the company needed a fire-breathing dragon, which he, I guess, assumed he was.
Yeah.
And this comes back to some of the things we've talked about before on the podcast, like this entrepreneurial desire to just blow shit up, which I think does get politely characterized as disruption sometimes, but also just made me think back to the comment in that Ronan Farrow article from, I think it was Reid Hoffman or Sam Altman, which was that Elon wants to save humanity, but only if he's the one to save it. Just the grandiosity of it is astonishing.
For me, Elon buys Twitter. It descends into madness a little bit. The engagement drops down, and Zuckerberg sees an opportunity to bring his own version of Twitter on, which was Threads. And Threads got this amazing uptake, the likes the world has never seen. But very quickly, within 5 days, that engagement went down. And when you go into Threads, I think it was your comment, Lainey, it's a bit like looking into the abyss. There's not much there. But I think there's a lesson for entrepreneurs in it, because often entrepreneurs say, oh, I've got this customer that does this thing, and if I just go and add this new feature, or if I bring this new product to market, because I've already got customers, they'll engage with and they'll buy from me because I've already got them as a customer over here. And what we often find is that customers think about who they're dealing with in a certain context and say, I will buy this from them. And just because I'm buying this from them doesn't mean that they'll just open up and say, oh, I'll go and consume and engage on all of these other things that you want to ram down my throat. And so that, I think, is an interesting lesson, because even something the size of Facebook wasn't able to get that customer engagement. Having said that, I don't think it's dead for Threads, because what they did was they launched a platform that allowed a single sign-on and made sign-ups really easy. And they just got it out there, and engagement has dropped right down. But already you can see in Instagram, there's now the Threads button. So we're getting a little bit closer to some integration. And then as they bring out some of the other features, if Twitter, X, whatever, continues to not deliver and they get better engagement between Threads and Instagram, I can see that starting to pick back up, as long as the features of X start to get found over there. And so it's not to say that I don't think that there's an opportunity for Threads. There absolutely is. But any view that the first step that all customers are just going to go, this is amazing, I'm going to consume it, we don't see that pattern quite often.
No, and Twitter, it took several years for it to get to any sort of critical mass where it felt like that there was real engagement, and Threads will probably be the same. But another interesting kind of mention in this article was about how they would, after Elon took over, they were talking about what should Twitter be? It should be like a platform for governing the discourse of the world. And then one of his minions was saying, yeah, but maybe there should be a way to prioritize things in that sort of discourse of the world. And I just was shaking my head when I was looking at this, because the free speech warrior just always, all speech is free. It's just, and equal, but some are more equal than others, is what that conversation made me think of. And it just, the disingenuity of Elon and his statements just drive me insane.
I had the exact same reaction, like that, all that rhetoric at the time of him acquiring Twitter on the basis of free speech. And here we are. But going back to your point, Don, I think it's been interesting to watch the transition. So I've almost totally left Twitter Facebook has become more relevant. But the other thing, Don, as you've been working on the podcast, is the relevance of LinkedIn now. I think for me, LinkedIn is, in the demise of Twitter, LinkedIn has become even more relevant, and I'm getting much more engagement there. And I think for founders, that might just be an interesting thing to share, is what you've seen, Don, in terms of engagement rates as you've been promoting the podcast and using LinkedIn as a means for that.
Yeah, no, that's why I'm so fascinated with it, because how do we actually use it for some value? But
just going back to a point you made before, Don, about ramming things down people's throats, the kind of desire to turn Twitter into this everything app where it's going to be turned into a payments platform. The thing that I find dangerous about that, and perhaps is a lesson for some other founders, is that it's none of that has been made around user experience. None of those decisions have been made around user experience. So none of that is designed to make the people who use this platform any better or more efficient. It's not anything anyone's asked for. People have only been asking for an edit button on Twitter since it was this desire to make it, I think you've said previously, Don, a reflection of the entrepreneur as opposed to something that actually people want. It is a slippery slope and is pretty dangerous, I think.
yeah, and some entrepreneurs make things that are a reflection of themselves that other people want. And the challenge is the entrepreneurial mindset is so creative and wants to change things and sees lots of opportunities, but it's also interested in things that a very small percentage of the population is also interested in quite often. And sometimes that doesn't scale, and then it leads to frustration. At the end of the day, if you give a person the reputation of an early riser, they can sleep till noon. And that's what we see here time and time again.
There's so much more, but I'll wait to read the biography, and then I'll do a book review for one of our podcast
That'd be good.
sessions.
Yeah, book review.
Book review.
I like that.
Just a paper on the book.
The Tribe Global Book Club.
Story time with Lainey.
Actually, that's not a bad idea. The Tribe Global Book Club. I like that. I like that. I think, look, that's the wrap up of the news this week. But what are we looking forward to at the moment?
I'm excited. This weekend, my daughter has her hockey presentations for the team and awards. So I'm looking forward to being with her for that. And I know this sounds a bit maybe sadistic, but actually just getting this offsite all up and running, I just love running those things. So that's exciting for me. Don?
We are loading up the caravan like a bunch of hillbillies, and we're heading to the farm with my wife's extended family. So there's 28 of us for the school holidays, which has very fun first 6 hours, and then the remaining 6 days has the normal ups and downs of family. Normally I'm at the center of those, so I'm going to try and not be that way, and finish off the barn. Got 9 windows to go in, so looking forward to that, plus a carport and moving of a shed. So exciting times.
Just a little on.
Jeez, that's busy.
And
karaoke.
Not only is there karaoke, you should see the new sound system. But this new Yamaha sound system, 4 speaker surround sound, 2 are going to go in the gum trees, blasting down, full Bluetooth. The neighborhood is going to know that we have arrived.
And that says something considering the acreage you're on out there. So
Yeah, wow.
They're kilometers away, but they will know.
That's awesome. I feel like, so the thing I get to look forward to is when I get home, going through my dog's poo to find out whether he's passed the plastic bag he ate yesterday. And if he hasn't, then I have to take him to the vet.
Wow. So is this a reflection on your week, Lainey? That is your highlight?
No, it's just I'm looking forward to hopefully seeing some plastic so it doesn't cost me $12,000 at the vet.
Got it.
That's what I'm looking forward to.
Yeah. It's not the poo, it's the plastic. No, I'm glad you clarified that. I needed
That
to.
makes a lot more sense.
Yeah. And also a reflection of the state of my life, really more generally. It's quite a metaphor, I think.
Let's all hope we can find the plastic amongst the poo.
Yeah. See, the fact that you've got some plastic to find, Lainey, is a really exciting thing. I'm well done.
Thank you. I'll take a photo and I'll share it.
Oh, please.
Based on our team chat,
that would be. Wake up in the
they
morning.
know I'm going to follow through.
Yeah.
All right.
I look forward to our team chat being subpoenaed one day. That's going to be.
That's going to be an interesting 6 months in court, just going through that.
Yeah. All right. You have safe travels, Lainey.
Yes. Travel safely.
Thanks, everyone, and see you on this same channel next week.
See you then.